Happy New Year and welcome back to your favorite Stock Market Weekly show. I'm your host, Evan Medeiros, and this is the show where we break down all of the notable moves across financial markets in a 20-minute show every Friday. So make sure you tune back in on the weekend to prep yourself for the week ahead. Now, it was pretty sleepy out there. We had the New Year's holiday smack in the middle of the week, so we had kind of just holiday trading throughout the entire week, but we officially rolled over the calendar. We're in 2025, and the market, for the most part, is still kind of chewing on the same things we kind of left 2024 with, and that is stickier and higher interest rates right now, with a 10-year around 4.6, and the market sort of figuring out inflation and the Fed's trajectory or their rate cutting cycle this year, or maybe they're going to hold steady this year, right? And that's something the market is kind of chewing on right now. Breath is a little bit wobbly, and we're going to get into all of this a little bit later in the video. Notable Tesla move this week, with deliveries coming in weaker than expected, seeing some outsized volatility in that stock. We're going to look at some of the other Mag 7, and we also are going to take a quick peek at Bitcoin here, which is still kind of comfortably in this range. So before we get into that, I do want to shout out our sponsor, Investors Business Daily. Thank you, IBD, for sponsoring the show. We've got links below here, and they've got a couple of great products. We've got links for both Market Surge and their IBD digital subscription. Make sure you check those out as we kick into the new year. Get yourself some new tools to help visualize and trade these markets. So let's get into it. Stick around. All right, we're back here. We've got TC2000 loaded up. That's the charting platform we're going to be using throughout this video. It's a platform we support here at the Trade Risk. You can head to thetraderrisk.com, check out the downloads, the indicators, the cool stuff we have. We've got a referral link in the description of this video for the platform as well. And if you like any of the layouts, indicators, and screens that we have throughout this video, check out our website, check out TC2000. Now, let's get into the numbers here. 1 week return. Again, 1 week was not an official full week in 2025. We had the end of 24 and then the start of 25 here, but it was a negative note across the S&P, the Dow, and the Nasdaq. Notably, the Russell 2000 was positive. It was up 1.11%, just shy of 1% this week. So that was nice to see. You can see our volatility still really hasn't budged. We've got the VIX hanging out around 16, which is basically where it started the week. It kind of left the week in the same spot. Notice below here, so we've got our smart trend filters. Get a lot of dots kind of printed on here because we have a couple of indicators, but notice that the daily time frame on all of the US averages right now are in a downtrend. They've been in a downtrend for a couple of weeks, and that's persisting right now. I shouldn't say a couple of weeks. The Nasdaq's only been in a downtrend for the last several days. The Russell's been in a downtrend for the last couple of weeks, and the Dow Jones as well. Let's get into our sector view here. You can see it was a mixed race. We had 4 sectors in the green. Energy was the big winner to start off the year. Same with utilities and and real estate. Those notably were kind of some of the most beaten up areas of the market. So a little bit of a kind of a reflexive or mean reversion bounce this week for those sectors. On the downside, materials, consumer discretionary staples, those were our hardest hit here, down 1 to 2%. Now, speaking of our smart trend filter indicator, most sectors here now are red. In fact, everything except for energy is printing a red dot. Red dot means we have price, volume, price action all aligning to the downside. Now, this is a daily time frame. This indicator is fractal. So if you were to throw on a weekly time frame here, notice we've got a lot of uptrends here. So again, time frame matters, and especially when we get into pullback situations and volatility, this is something we always want to kind of come back to and anchor our time frame, because when we talk about the uncertainty or a pullback or bearish price action, we have to just isolate the time frame we're talking about. So when we look at the daily time frame here, you can see that we are objectively kind of printing red dots across the board, and that's no surprise. These aren't new downtrends. These are mostly established kind of pullbacks that we've seen in the market for the last handful of, or couple weeks. So if we take a look at market breadth here and we look at the number of stocks hitting 52-week highs, 52-week lows, you can see that this is still not really very inspiring here for the bull case. We're not seeing many stocks make 52-week highs. In fact, it's pretty much non-existent. And the number of stocks hitting 52-week lows, look, we'll give it to the bulls at least this week. We didn't really get more of an uptick, right? We didn't see a substantial increase in the number of stocks hitting 52-week lows. So you get a little bit of a bonus point for that, but you're still getting an unfavorable ratio here. And this to me is still a very glass half empty look to, what's going on underneath the hood in the market. I want to see, again, more stocks starting to hit the 52-week high list. I want to see this ratio get back into positive territory. And then I want to see us stabilize from a price action perspective. Right now, not really seeing that as of right now. If we move on to our macro slide here, you can see that interest rates continue to remain sticky here, and so does the dollar. Now, the dollar chart's a little skewed because of the distribution it paid, but if we look at the 10-year Treasury, you can see, it is going sideways a little bit, but it's just kind of hanging up here at its previous highs, which is about 4.6 in the 10-year Treasury yield. We're going to look at the bond fund a little bit later, and that'll clear the picture up. But this is still putting, I think, a lot of pressure on the market, and so is the strong dollar. I mean, that is going to come home to roost when we start to look at earnings for some of the big, especially the mega cap companies that have a lot of international business. Maybe not this quarter, but certainly next quarter, you start to see the impact there of the stronger dollar. So dollar was up. We see yields kind of flat or sideways, depending on what you're looking at this week. Oil was off to a big start. So was Bitcoin. So was gold. Basically, commodities across the board were pretty favorable to kick off 2025. And we'll take a look at some of those in just a little bit. So if we now take a look here at the S&P 500, where we usually start our analysis, this is the weekly chart. I'm going to switch over to the S&P cash. And you can see that we were down this week, but we certainly drove off of the lows here. So we didn't quite close at the lows. We didn't wash out. We didn't really make that second leg lower. But if we go to a daily chart here of the S&P 500, this to me still is, kind of a concerning pattern, or at least just, again, a pattern that I just want to be a little bit cautious on. We talked last week about we talked about a lot of things, but we talked about the gap that's still open here from the election, which really didn't get filled. We briefly kind of traded and undercut last week's lows on Thursday's session, but you can see that we did get a nice bid and kind of springboard off into the close of the week. So that was nice to see. But this looks, just again, from a pure kind of TA perspective here, it looks like you've got a kind of a topping pattern brewing here. Call it a head and shoulders, doesn't really matter. It's mostly just a pattern that's indicative of some potential distribution here and a holding pattern after a prolonged period of an uptrend. So this to me has, again, just a lot of fingerprints of what could be a topping pattern here. We laid out a couple of scenarios after this session right here, right? This was where our analysis and our tune really changed on this market, was on this session right here, this big down session that we saw, a big expansion in range, a ton of dollar volume traded, 3% down in the SPY. That's setting the tone that something kind of transitioned here, where the nice, steady, cool, calm uptrend that we were in for all of 2024 is starting to change character. And I still think that's the case. I think that this ends, or this continues in kind of two different ways here. We either have a more substantial correction, which at this time we were calling for basically a 10%, 8 to 10% correction in the S&P 500. I still think that's very much in the cards. Even over the next few weeks, I think we could get a 10% correction here in the S&P 500. That would not surprise me. If we don't, right? If we don't, the alternative here is that it feels like the market is going to at least need to move sideways at best here and chop around for the few more weeks ahead of us, right? It doesn't feel like we're just going to kick off. I would be very surprised if we just kicked off and just went off to the races here and, broke out to new highs and just, made new highs into the end of January. That would be pretty surprising to me. It seems like with the breadth picture that we're seeing, with sticky interest rates, earnings season coming along, some uncertainty with the administration turnover, it feels like you have the ingredients for the market to either chop around or pull back. And I'm still going to be in that camp right now. And in terms of levels that we want to pay attention to, I would say this week's lows is going to be very important. If we continue to hang above this week's lows and we can't get back below 58.50 or so, then we very well might be in the environment of just sideways and chop for longer. I'd be entirely okay with that, and that's a very reasonable path here. So I think that's a big level to watch, is basically this week's lows, call it 58.50. We do have this gap in here. And again, I should have planned these levels out ahead of time, but if we were to have a 10% pullback, you're looking at basically S&P 500, 5,500. 54.60, somewhere back into here. So again, not saying it has to go there. It's not a prediction. I'm still net long this market, right? I still have long exposure, but it's just that in the immediate term, it feels like there is some softness here to come down based on a lot of the things that we already talked about. If we look at the Nasdaq 100, you've got a slightly better picture here. I mean, you've got more of a kind of classic sort of pullback scenario that's underway here. Maybe it's forming some kind of triangle or wedge or channel. So far, the mega cap tech trade, or Mag 7, seems to be holding up a little bit better right now. We're going to look at some of those stocks in just a little bit, but the Qs here, are kind of still in a series of lower lows, lower highs, but not as bad, I guess, as the S&P 500. The Russell 2000, this looks pretty vulnerable. We talked about it. 225, that's a pretty big level for us. We're still kind of hanging below it. We were kind of wedging here. We broke below it, retested, and now we're holding. So we're really just kind of moving sideways here after this, kind of decent leg down into the first half of December. And now we're just kind of basing out in the very lower 20% of this down move from the first half of December. So IWM looks a little bit suspect and rough here as well. And if we can get above 225, my tune starts to change a little bit. Otherwise, I think you just got to kind of hold your breath a little bit and, brace yourself for a potential continuation leg lower. So that's kind of the read there on the market as a whole. Not that optimistic in the short term, but I think there is a path to at least kind of chop it out and not have to endure more price pain. If we take a look at the VIX, we can take a quick peek here. It did pull off and kind of move lower here into the end of the week. That was nice to see. It was elevated. It was spending most of its time around 17, 18 this week. And then Friday's move up in the S&P kind of helped this relieve a little bit of stress. So that's nice to see, but it's still got a little bit of bid to it. I wouldn't be surprised to see that float higher if we are going to see more pressure in the S&P 500. We talked about gold at the beginning of the show, had a nice up week, still kind of in a holding pattern, not too much else to say about it. I think oil, though, is the interesting story here, because you're definitively kind of breaking above now this consolidation. We're not quite breaking above major multi-year levels, multi-month levels, but we certainly cleared the wedge here and are starting to work ourselves up. So energy had a nice bid to it. Oil, nice start to the year. So perhaps we continue to look at the energy stocks as opportunity as we move through January. Now, let's go into Bitcoin here, and then we're going to round out with the Mag 7. So Bitcoin did start off the year kind of like oil on a nice footing. So if we look at the weekly chart of IBIT, it was up 4.25%. We kind of undercut. We briefly made a new low in the multi-week range that we've been in, and then we closed near the highs. So some constructive price action here for IBIT. If we look at Bitcoin, the spot price, that basically coincides with about 92K on the low end. And we have, kind of the messy 199 to 103 kind of cluster of highs here in this area. It seems like we're kind of comfortably in the sideways range. A few weeks ago, we were sort of calling for a wick down into the 85s or so. I still think that's in the cards. If we are going to get a 10% SPY correction, probably going to spill over into Bitcoin. It does seem like Bitcoin's got a little bit of relative strength built into it. So maybe this is the market that, again, can just work itself off going sideways like it's doing. It doesn't have to, correct through price depreciation, but more so through time. And that's kind of what we're waiting on both things. Bitcoin seemed to kind of correct a little bit earlier. It was just a little more responsive on the correction. Seems like the S&P kind of, followed suit, and now we're kind of waiting to see how the dip buyers step into these markets. So Bitcoin still have long positions here in our trend following system Galahad, and we'll continue to participate in this until the trend reverses. Now let's take a quick look here at the Mag 7, and then we're going to round out with our own trading systems. When I look at the Mag 7 grid here, a couple of things really stand out to me. I mean, if we look at the 1 week performance, you can see it was basically all driven by Nvidia. Nvidia was up 5% this week, so that was impressive. You had Tesla that was down 5%. You also had Apple that was down 5%. I think Apple is the most interesting to me right here because there is a little bit of falling from grace here from AAPL. This was, really trending nicely here, kind of moving to all-time highs into the end of the year. And now we've kind of fallen off a cliff here. Again, it's contained. It's about a 7% pullback, but you're talking about one of the largest companies in the world. So it's something to take notice of. The trend clearly broke here, and Apple seems to be a little bit in the penalty box here, kind of breaking that short-term trend that it's been in. And it looks like it's, very much in corrective mode right now. I think this 235, 236 will be an important area for it. That's approximately, the highs, the July highs, the November highs that it broke out from. If we, kind of lose this 236, which we're talking a little bit too far ahead of ourselves, let's at least see a retest of this area. But if we saw just a drop below this 236 or so, then you're going to have a lot of pain here, I think, or spillover effects into the Qs and some of the other market cap weighted indices. That is, of course, unless the other Mag 7s can really pull the weight. In this case, Nvidia did pull its weight. So if we look at Nvidia's chart here, you can see it's getting back above 140. As you know, for anybody that's been following for a while, we were again keying off of this 140 area for quite some time, and it's back above it. So again, I think you got to just remain at least a little bit neutral here, maybe semi, optimistic here for Nvidia that it's back over 140. It's back over the old June highs, and it's consolidated now for a couple of months. Maybe it's worked through itself through time rather than a severe correction. So again, a little bit of bonus points there for Nvidia. Tesla, though, like we talked about at the top of the show, had weaker than expected sort of deliveries. I'll just expand this chart here, and it saw a pretty painful, 6% sell-off here on Thursday following those delivery numbers, and that is, or was following, already a kind of a 5-day slide here for Tesla. So Tesla had already been down, or I guess at the lows was down about 20% in 5 trading sessions. So that's pretty substantial. We saw a good, kind of bid come in here on Friday, kind of filled the gap, and kind of reset a little bit of those oversold conditions. So Tesla, I think, is still an interesting name here. It's, clearly the chosen one with Elon Musk, and has a lot of power now and sort of, influence right now for himself and potentially the companies that he runs. So I think Tesla, the trend is up, the breakouts, kind of holding those gains from the post-election time. And we'll see if this, if this turns into a higher low that can actually get defended. It seems like this 380 area is going to be an important one to pay attention to looking ahead. So that's all I have for the market. Let's take a quick look at some of the trading that we did here in our own trading system. So as you guys know, we have 3 trading systems here. They're all in the swing trading time frame or longer. Galahad's a trend following model, and it was a pretty light week of trading. We had 1 buy and 1 sell this week, right? So not a whole lot going on, very sleepy, and not too much else to say about that. If we take a look at our risk exposure across these 3 trading systems here, you can see that we're still, again, pretty net long this market. So, my commentary is kind of glass half empty, a little concerning in the short term, but make no mistake, I'm still long this market. Again, these are rules-based systems that are kind of running without my judgment, but our Merlin, our intermediate term trading system's 83% long right now. Our short-term system is 60% long. This one will move around quite a bit, so I would expect it to get flat or, get short even if we see more volatility start to step into this market. And our long-term system is saying, hey, look, there's nothing wrong with this market right now for my time frame, right? So this is that kind of division of time frame that really matters and dictates and drives exposure. I added a new chart here this week, kind of playing around with all these visualizations. If you have comments or if this is helpful, leave a comment below. But here is our roundtable portfolio, which is basically the performance across all three systems on a day-by-day basis. So you can see that this week, basically, our trading systems was up slightly. It was up 10 basis points this week. S&P was down about 0.5%. And, you know, not every week will be a winner, that's for sure, but a little bit of relative performance captured here in our trading systems throughout this week. So like I always say, if you are in need of a structured rules-based system, if you want to take advantage of some of the research that we've conducted over the years, check out our trading systems on our free trial, or our $1 trial, and see if they can be a good fit for you. So that's all I have. Thanks so much for tuning in every Friday. Don't forget to subscribe to the channel, like the video if you liked it, and we'll be back here next Friday with another video. Take care, Happy New Year, and thanks for watching.